Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Juan Artigas, Head of Research at the World Gold Council, to discuss how much influence the U.S. election will have on gold demand and performance. It's great to have you back with us. Welcome back to Trade Talks.
Thank you so much for having me.
And you wrote in a recent note that whether there is a clear win by either Republicans or Democrats or a contested election, it will likely support one or several of the key drivers of gold investment demand. Tell us more about that.
Yeah, so one of the most important ways in which investors use gold is as a safe haven, as a way to protect against unforeseen risk and higher uncertainty. And one of our perspectives is that regardless of the outcome of the election, and perhaps in part because of what we are seeing now, which is not a clear outcome, investors may use or may look for high quality liquid assets to protect their portfolio and to hedge volatility. Now, in addition to that, the other aspect that is important is interest rates. So low interest rates are seen and usually historically being beneficial for gold because investors, again, look for ways to put their money to work that is not just in bonds or cash. And in particular, in this type of environment where interest rates are forcing investors to increase the risk in the portfolio in other ways, gold is seen as a very good complement, a strategic asset.
So what are your thoughts on how gold performed in 2020? Was it as expected through what's been an unprecedented year?
Yeah, so interestingly, the COVID-19 pandemic, of course, was not only unprecedented, but we didn't know anything about that really early in the year. However, it has enhanced trends that already existed. So risk levels for investors were already there, Brexit, trade tensions, and so on. And COVID-19, what happened is just it created even more potential disruptions in the economy on the one hand. On the other hand, it also push central banks to be far more aggressive in lowering interest rates, right, and increasing money supply and various other things that, again, can be quite supportive of gold. So, in fact, actually, we've seen a lot of interest from investors, big and small, so institutional, individual, and anything between, looking at gold as a strategic asset. In particular, gold-backed ETFs, for example, have increased by more than 1,000 tons this year, which is $1 billion, this year. So it's been a very, very substantial, increase. For thinking about 1,000 tons just in context, that's much more than we have seen in previous years collectively, right? Not only that, our gold demand trends reports highlights how investment demand overall, in particular around coin demand, has increased in spite of some weakness in the consumer side.
So then, Juan Carlos, if the backdrop economically remains the same, what's your outlook for the remainder of the year and looking into 2021?
All in all, our fundamental perspective remains fairly consistent. We expect some deceleration on consumer demand because of the deceleration in the economy. So gold has a dual nature, consumer side and investment side, and the deceleration of the economy has created headwinds from gold from that perspective. However, in these types of environments where risk is high and interest rates are low, typically investment demand tends to offset some of that weakness. And we don't think that those two particular drivers are going away anytime soon. And we believe that investors will continue to see gold as a strategic asset, not only over the next few months, but over the next coming years because of the particular environment we're facing.
So when you say consumer demand, that includes jewelry and consumer discretionary types of purchases. Is that what that means?
Correct. So for example, more than 40% of demand for gold on an annual basis either goes to jewelry or is purchased in the form of jewelry, the majority of it, or also in the form of technology, so electronics and so on. So that type of demand tends to be primarily pro-cyclical. And in fact, we have developed a tool called Quorum, which is available on our website, where investors can see how the different macroeconomic environments can influence both the consumer side of gold, but also at the same time, the investment side, which oftentimes, as you can imagine, go opposite to each other.
All right, Juan Carlos, great to see you. Thanks for joining us on Trade Talks.
Thank you so much.
You got it. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.